on Rainmaker's platform in December 2021, our ratio of buy orders to sell orders was about 1-to-1.
Thank you so much for tuning into Journey with Christian Dievas podcast. I'm your host, Christian Dievas. This next guest we have on is the managing partner and CEO of Rainmaker Securities, which is going to be really fun because we're going to be diving into his background a little bit, but also where he sees the secondary as well as later stage private equity world and markets and the private markets. So before we're going to dive into the Rainmaker Securities, he was a institutional equities business at Oppenheimer & Co. in New York, and prior worked in the institutional equities business of Jeffries & Co. in San Francisco. In these roles, this gentleman focused on public companies in the mobile device, telecom infrastructure, enterprise networking, and digital media sectors. He's also a graduate of Harvard Business School, private equity and venture capital executive programs, and he's currently the managing partner at Rainmaker Securities and the CEO. Please welcome my next guest, the one and only Glen Anderson. How you doing today, Glen?
I'm good. Thank you for the kind intro.
Well, Glen, I appreciate you jumping on, and obviously it's going to be a fun conversation because, you know, the macro economy right now, there's been a lot of things going on. What's interesting, I kind of give the foundation, private equity sitting on a lot of dry powder, family offices sitting on a lot of dry powder, but we notice large trajectory within the next 5 to 7 years, almost like $3 or $4 trillion of increase is going to be deployed in the private market sector. So, Glen, with that being said, what is the excitement opportunity that a lot of high net worth and ultra high net worth individuals are infusing capital? What are you seeing at a macro level right now in this private sector and the excitement within the next 4, 5, 7 years?
Well, I mean, look, when I started this business back in 2010, the private investing market was really the purview of venture capitalists and large institutions. There wasn't a lot of there wasn't a lot of opportunity available for individual investors to get involved in private company investing. There was no market there. But starting in maybe 2011, the private marketplace really started to grow, and the catalyst for that was actually Facebook. Facebook made it very easy to trade their shares privately before they were a public company. A lot of people were really excited about the Facebook story. A lot of individual investors rushed to get a piece of the action and and become an investor in Facebook, and it really catalyze this private markets available to the public investor. And since, the market has grown by leaps and bounds. I mean, whereas, you know, when Facebook was trading, there were, you know, maybe 2-3 big companies or 2-3 companies like Twitter traded a bit, so did Palantir, a few companies that catalyzed the market. Now there's 1,000 companies traded broadly. And that's all happened really over the past, like I said, 10, 12 years. And it's an opportunity for the average investor to get involved in the private marketplace in a way that wasn't available a generation ago. And I'm excited to talk about that topic. You know, it's what we do at Rainmaker Securities is find opportunities for investors to get exposed to private securities. And I think it's an exciting asset class for the investor to be part of, because you're getting involved in innovation before it's mainstream. You're getting involved in these private companies very early on when they're in their growth trajectory and they're disrupting markets, versus when they become public and a lot of the growth is already gone in the story. So you can you can get involved in private securities when, they're experiencing their most rapid growth phase, and consequently, their most rapid valuation increase. So it's an exciting marketplace.
Well, I appreciate
to be
you
part
kind
of
of giving the whole foundation. It is, and the evolution as well, like you mentioned, from 2011, 2010, when you established Rainmaker Group Holding, and to see and let me ask you this, because like you mentioned, now people have access to this through platforms like yourself that they didn't have prior. So do you see now, and futuristically, do you see the inefficiencies kind of being able to be more established so that it becomes a more simple process to make the buyer and seller more efficient process? And because of that efficiency, do you feel like there's going to be more growth? Well, what do you see in regards to that?
Well, growth, no question. I mean, we have had a pause here in 2022 and beginning of 2023, where the market growth has basically flattened out because of what's been happening in the macro picture of the economy, the world economy, and the U.S. economy in particular, where we have a rising interest rate environment. Inflation is still a problem, and consequently, the public markets have sold off pretty sharply. Although that's been there's been a bit of a comeback here in the last 3-4 months, but longer term, there's no question that this market will grow. Because there's a lot of capital chasing fewer assets on the public side. Companies are simply staying private longer. Consequently, there are less opportunities to invest in public markets if you want to invest in exciting growth stories. Now, if you want to invest in exciting growth stories, you have to look to the private markets to do that. And there's a lot of opportunity for the investor to generate alpha by looking at the private markets and making investments there. And what we do at Rainmaker is we try to make it easier and easier to make these investments. So the truth is, it's not private market investing is not a press a button and buy a stock business, because every company has a different process for investing in their stock. You need to know you need to know the lay of the land for each company, what the process is, what the restrictions are, how to get a trade done, and it is a process. It's not press a button like public market investing. So there is complexity to it, but that's what we do at Rainmaker. We know how to get trades done, and we can help the investor get exposed to this exciting asset class.
So this is important to piggyback on, and let's dive a little bit deeper as well, because when companies go IPO, they are on the public, which means now people have access to their data, all the financials, all that fun stuff. It's available for the public. When they're private, they don't have as many regulations and requirements. They still have financials, don't get me wrong, but it's not as easy accessible to investors. You do have to work with people like yourself. So because you guys have access to that, you guys have those really deep relationships on the cap table, or the founders or the owners themselves. So, Glen, how do you navigate that to ensure that when you are, working that relationship between the buyer and the seller, being able to give the proper documentation, proper information, and helping that investor invest into the company with the right information, which is, of course, the financials and the background and things like that?
Well, yeah, to be clear, it's not often that you have access to financials. And that's the problem with private market investing. Is on the public side, companies report every quarter, and you have lots of information you can use to make an informed investment decision. The flaw in private market investing is you don't have a lot of information. The company won't necessarily disclose any detailed financials or other information that normally you have available in public market investing to make it an investment decision. And there are exceptions. There are exceptions, and it really depends on who the shareholder you're buying from is. Some have access to that information, some don't. So sometimes it's a leap of faith investing in private markets because you know the company is doing well, but you don't know exactly how well, and so you have to, take more of a leap of faith when investing in these companies. But that actually manifests itself in the fact that most of the trading that happens in private market securities happens in larger cap names, like $1 billion plus, so-called unicorn names, because there's a lot of public information about these companies. There's articles that are published all the time. There's disclosures that are put out. So there's more information on the unicorn names than the sub-unicorn names, and so that's where we see the bulk of the investment interest from traditional public market investors, because there is some information you have that's actionable and you can make a somewhat of an informed investment decision. But information access is a problem in private market investing. There's no question. But we at Rainmaker try to do our part to get the investor as much information as is available in the public domain, or we can get privately to help the investor make that decision.
Yeah, because I want to kind of really foot stomp on the IRR, internal rate of return, in the private markets. These companies are staying private longer, from normally like a 7 time frame now to almost 11 to 12 time frame before they IPO, which means there's a lot of infused capital, institutional, a lot of endowments shoving a lot of capital in these companies to go from that unicorn style to still a very large market cap on the top end before they IPO, which of course is still massive, trajectory up to the right. Now, with that being said, then, do you feel in the future the inefficiency or the lack of data regarding the financials and certain KPIs that really help underwrite these investments before investors deploy and infuse capital in them? Do you feel like that will find a balance, if you will, find a foundation? Do you feel like that inefficiency will become more efficient without regulation requirements, or do you feel like it's just kind of part of the industry right now? Do you feel like in the future we're going to see some more efficiency in regards to the availability of the financials and the metrics and the things like that?
The short answer is unlikely. And the reason why I say that is the companies have no incentive to provide confidential information to a secondary market investor. In a primary offering where they're raising a preferred round of capital, obviously they provide all this information to the investor that's coming in. That's just the nature of the round. They have to provide full diligence to the investor. But on the secondary market, where you're buying away from you're not buying into a preferred round where the money's actually going in the company. You're just buying the shares from an early employee or an early investor. The company has no incentive to provide that information. So, like I said, at Rainmaker, what we do is we try to pull together all the available information we can find in the public domain, anything we have access to privately, and help the investor make the decision. But I don't see a quick fix to the information asymmetry problem. It's just something you have to deal with when investing in private market securities.
So with these secondaries, these non-dilutive shares, let's talk a little bit about that. For those that are listening that want to deploy infused capital in this, there's a ton of different companies out there that are pre-IPO, that are later stage, that are at that kind of unicorn status. They have some tailwind. How do you help? Because you're not an investment advisor. However, though, you help your clients, make the transaction and facilitate and navigate that. What does that look like in you guys' part to play in that facilitation, Glenn?
Well, Look, our job, you hit on a good point, which is at Rainmaker Securities, we don't recommend stock. It's just there's compliance related issues. There is just like I said, information asymmetry. So we don't go to an investor and say, "Hey, I think you should buy company XYZ." It's just it's not something we do as a firm for a lot of different reasons, both regulatory and just good business wise. Our job is to provide access. So you come to me and say, "Glenn, I want to buy. I love SpaceX as a company. I want to get stock in SpaceX," and we make that happen. We find the shares. We navigate you through the process of making the investment. We do provide, like I said, all the information that we have available to help with the decision. But ultimately, information asymmetry is part of the business. And like I said, we do our best to help with that problem. But there's only so much that can be done. I mean, investing in private securities to some extent is a leap of faith. Bottom line.
No, I'm glad because, again, iterating what you guys do and what you guys don't do, right? It's being able to say, hey, we're not investment advisors. You have to still do the underwriting. You still have to find that company. However, though, you guys have the platform to be able to facilitate that conversation. So I'm glad you kind of talked about that. Let's talk, Glenn, when you're looking at, you focus a lot on, we talked about secondaries and later stage. Where you work with a lot of institutions as well as family offices, as well as direct, high net worth individuals and ultra high net worth families. And my question, Glenn, is with just a heartbeat, because you're right there on the forefront, Rainmaker Securities, you guys are facilitating this. Where are you seeing a lot of the capital being deployed? And what I mean by this, is it a specific sector you're noticing that is kind of getting a lot of infused capital, that there's a lot of excitement around, as well as are you seeing certain companies that kind of have a lot of tailwind right now? Because we are noticing a lot of movements in the markets. Stripe, a lot of people are gobbling that up, mainly because obviously the valuation went down, but they also see long-term valuation in the IPO long-term at some point. So I was just curious, what do you see and what are you seeing consistently with the ecosystem network you have?
Well, there's a couple questions layered in there, but to make it a fine point, like I said, we trade in about 1,000 names, and it's really a broad range. I mean, it's a broad range of different types of companies in different, in serving different sectors. The common thread is 95% of what we trade are quote tech companies. That's where the innovation is happening in the U.S. and abroad, and so technology is where most of the capital gets deployed. And if I were to say what are particularly hot sectors, fintech is there's a lot of hot names in fintech. There's a lot of hot names in artificial intelligence. Cloud computing is another area we see a lot of interest in, but it really runs the spectrum. I mean, we've traded a lot in Impossible Foods, which is an agricultural tech company, basically. We've traded a lot in SpaceX, which is a space exploration company. It really, there's a broad spectrum of both, sellers looking for some liquidity and buyers looking to get exposed to a cool tech company that they just love the story, So Yeah, there are some sectors that are a little higher than others, but for the most part, like I said, 1,000 names traded, and we trade in all of them, and there's just a broad array of interest in lots of different areas of tech in particular.
Okay, that's good, and obviously it's an evolution constantly, right? Depending upon the markets at the macro and the micro level. Obviously, there are some industries that are getting really, a lot of attention, and some industries, and it's vice versa. And there's always a constant, up and down with the markets. So I appreciate you explaining. I just wanted to get a kind of a quick update of what you're seeing there, Glenn. I want to ask you because again, facilitating this conversation and the secondary non-dilutive shares. I was noticing because some of the valuations right now are decreasing, right? And let's just keep it simple. Some of the employees are looking to liquidate some, or other investors are looking to liquidate their position or a portion of them, getting some chips off the table. And what I've noticed is the price. The valuation was $100 per share, maybe a year ago, maybe even 6 months ago. And now the price is kind of coming down. The valuation is about really 85. And what I'm noticing is that there's a disagreement between the buyer and the seller, right? The buyer really wants 85. The seller really wants 100. And there's this, it has to be kind of embraced into the market. And I'm curious, are you seeing that? And do you feel like at some point, because the valuation was so high, and that the valuations are decreasing again, that now it's just going to come back into the market at some point, and we're going to come back down in that circumstance, and in the example I gave, back to 85, and the buyer and seller will just have to agree on the current valuation and embrace the kind of the market differentiation there.
Yeah. Look, I'll give you a statistic or a data point, I should say. On Rainmaker's platform, in December 2021, our ratio of buy orders to sell orders was about 1-to-1. There were as many buyers as there were sellers. It was a balanced market. Then, as we all know, 2022 happened. And there's a big correction in public equities, particularly tech. And the reality is, when public markets sell off, private markets have to adjust in sympathy. The reason is because investors have a choice. They can invest in public equities or private equity. And when you can buy a public equity for 50% less than you could, 4 months ago, where do you put your money? That public equity looks very attractive. So for private equities to draw investors, there has to be a price adjustment. So what happened on our platform is, like I said, 1-to-1 into 2021. By June of 2022, it was 4.5-to-1 sellers, meaning I had 4.5 sellers for every one investor. So the market was very imbalanced. Now, bringing us all the way to today, we're down to about 2-to-1 sellers. So there's about 2 sellers for every 1 buyer. So the market has come back into balance to some extent. And what caused that is, when you have 4.5 sellers to 1 buyer, like we had in June of 2021 or 2022, I should say, it's economics 101. Supply exceeds demand. So what happens in any marketplace when supply exceeds demand? The price has to go down. And so that's what we've seen. We've seen over the past year and change, private market pricing has come down really across the board. Like, every name we trade with any frequency has traded much lower than it was trading, 12, 15 months ago. In some cases, it's 50% haircut. In some cases, 60, 70% haircut. And in some cases, it depends. It's very company dependent. I mean, Some companies have maintained an audience of excited investors, so the pricing hasn't come down drastically. But really across the board and across, like I said, 1,000 names that we trade, I can't think of one stock that hasn't adjusted itself to the realities of the marketplace. So the consequence is there's a lot of opportunity here for investors because, look, you can buy these stocks at a significant discount from where you could have bought them a year and change ago. If you're really excited about, the story for these private companies, now is probably a time to look at investing because you can get a great deal on a company that, might have been too expensive in 2021, early 2022. So I see this as an opportunity for investors. And I think, the fact that now we've gone from 4.5 to 1 sellers to 2 to 1 sellers, I think is indicative of that. The more buyers are seeing that and leveraging the opportunity to get involved in these companies at lower prices than they ever could before.
See, now it's a buyer's market. Before it was a seller's market, and now it's a buyer's market, and that's why it's just so fun to see, like you mentioned.
Yeah, in 2021, it was definitely a seller's market. And now, still to this day, it's still a buyer's market. So, if buyers are interested in picking up exciting growth, because these companies are still great companies. They just adjusted to the realities of the marketplace in terms of valuation. But there's really fantastic companies in the private market, and they're going to be hugely successful. Stripe is a great example. You mentioned Stripe. The valuation has gone down from their before this recent round. The prior round was at a $95 billion valuation, and now the most recent round they traded at a $50 billion valuation. But Stripe is a fantastic company. It's everywhere in e-commerce. It is the ultimate growth story. If you believe in the growth of e-commerce, it's the ultimate story to be involved in. And you can get it at almost half of what you could have got it, a year and a half ago. So,
yeah, extremely valuable. And I'm glad we're bringing this up. And that's why I appreciate you just talking about this, because there is just such massive upside potential. And I know right now I've talked to a lot of family offices and high net worth individuals, and a lot of them are just sitting on dry powder because they don't know exactly where the macroeconomy is going. But I don't know when this podcast is going to go out. But at the end of the day, it's a matter of finding the opportunity and skating to where the puck is going. And obviously, Glenn, you see that. And that's why I appreciate you being on here and sharing this. I want to talk, you mentioned here in regards to these private companies. We've talked a lot here, just basically here in the U.S. And I know you guys have a Rainmaker Asia Holdings as well. And I'm curious, Glenn, do you see opportunities in the emerging markets and specifically in these secondary as well as later stage companies? Do you see opportunities there? What is your perspective on that?
Yeah, look, to be clear, we trade globally. Our investor base reflects that. We have investors across the world that we work with. But we also, on the sell side of the conversation, in terms of, the shares we trade in some of the most exciting startups across the globe. We've been very active, for example, in ByteDance, which is a Chinese company. DJI, before it was public, we traded in Alibaba, before it was a public company. Who else? Didi Chuxing, Chinese competitor to Uber, we traded quite a bit in. On the Indian names, National Stock Exchange of India, Baiju is another example in India. In Europe, Klarna, we've traded quite a bit. There's lots of exciting stories across the globe. To be fair, the epicenter is the U.S. and Silicon Valley in particular. That's just where most of the unicorn names have been created. But there are a lot of really cool opportunities, like I said, across the world, and we facilitate those investments as well. So,
well, that's exciting. So, and I get where you're coming from. Obviously, and that's why I wanted to bring up some awareness to other emerging markets, because I'm seeing some very exciting stuff in Israel and a hub. I just talked to someone in Saudi Arabia as a really incredible technology hub, as well as Ireland. So really some exciting stuff in these other countries that we may not be aware of outside of our USA ecosystem. So, but you're exactly right. I've noticed most of the hub and most well-known are here HQ, and they service other clients outside, and you guys obviously help facilitate that. Is there just, still talking on the emerging markets, is there, just on a personal note, Glenn, is there one, country or market that you're excited about, that you're seeing some really massive tailwind in regards to maybe just, unicorn potential, talent acquisition, a lot of the fun, just a synergistic kind of community that's happening? Any specific market that you're noticing outside of the U.S.?
Recall we don't recommend investments, but I can say that the emerging market that I'm most excited about, for a lot of reasons, is probably India. I mean, it's a country that's changing. It's a country that was very poor, but saw the need to modernize itself, and things are truly changing in the country to embrace a market economy model, to invest in infrastructure, to invest in human capital, and it's showing in results in terms of the growth of that the Indian economy. And demographically, also, it's favorable compared to, say, China, which the Chinese population is actually shrinking now, which creates some big headwinds ahead for growth of that marketplace. But India is still growing its population. So if I were to pick an emerging economy that I'm excited about, it would be India. And we see more and more startups coming out of India that are really exciting stories, that are leveraging all the dynamics of that particular marketplace. So, and we can facilitate for investors getting involved in that market through investing in exciting startups in that country. So.
That's awesome. That's awesome. Yeah, I definitely understand, and I want to reiterate, you guys aren't giving investment advice. It's more of just, what you're seeing on a personal note. So I appreciate you kind of reiterating that. And that's cool that you're saying India. Is there, in the India market, are you seeing one vertical compared to others, like biotech or technology, or maybe just infrastructure? You mentioned infrastructure. Obviously, there's a lot of tailwind and opportunity there. So in India market, is there a specific vertical that you're seeing is making some leaps and bounds, and kind of is making you, excited about?
I mean, look everything. India is modernizing very rapidly. So where the exciting private company stories are, is probably it's probably going to be long term. Probably going to be the same areas that are exciting in the United States: AI, e-commerce, fintech, all the same dynamics that are affecting markets across the globe are coming to China and coming to India. And the interesting thing about India is, think about it this way. A lot of consumers in India are having their first internet experience, not on a PC like you and I did, but on a mobile device. They basically, India basically leapfrogged, the U.S. in that regard, where the center of doing business and the center of consumer experience has been the mobile device versus the laptop. And so the kinds of technologies that are developing in India reflect that fact. So it's different. It's going to be India's going to evolve differently than the U.S. did from a technology perspective, but it's going to be exciting to watch. It's going to be exciting to watch the amount of innovation that could potentially come out of India over time. So I'm a long-term investor in India personally, and I like I said, I don't recommend investments. So take this as just one guy's personal opinion, but I'm pretty excited about the opportunity in that marketplace.
Yeah, and we're just riffing on this, but I'm glad you're sharing this, because obviously what's top of mind for a lot of people is China, and they're seeing the evolution that has had. But I think it's really interesting your foot stomping on India and the opportunities. I have invested into a fund that focuses on India, so it's funny that we're talking about that. So maybe we'll have to talk about that offline and what you're seeing a little bit further. Glenn, I want to ask you, because this is what I found very interesting about your background. You were a consultant for incredible companies like Lehman Brothers, the New York Stock Exchange, Sprint Wireless, Comcast. You come from a lot of the technology world, as well as the communications, telecom kind of world. Glenn, from that ecosystem, from learning those skills, how did that help you build Rainmaker Securities? Or was there any alignment? Was it certain skills that were totally not valuable in regards to building out the incredible business Rainmaker Securities now?
Well, a little bit of everything. To be clear, I graduated an engineer. I was a mechanical engineering undergrad, and I was in the tech world for several years before I moved to finance. So I'm very comfortable in technology because, as an engineer and later as a software developer, I was embedded in technology, deeply involved in what's coming next in technology. So after business school, when I switched to the finance world, I brought that set of experiences and knowledge to my roles in finance. And to be clear, when I was working on Wall Street for Jeffries and Oppenheimer, I was focused on public equities, not private equity, which there's a lot of parallels. I mean, a lot of the same, theories and analysis process happen when you're looking at a public market investment versus a private market investment. But the reality is, when I started Rainmaker and it was focused on private securities, I had to build from scratch. I mean, I had to build my Rolodex from scratch. I had to build a lot of my knowledge base from scratch. Excuse me. And it was, it was a challenging time for me, a personally challenging time to get up that learning curve and build a successful business. But I'm a guy that, my ethos is to work very hard and learn, and that's what I did. And ultimately, that's how we built the business in Rainmaker. And now, Rainmaker trades several billion in private securities. We have 75 people on the platform, and we're looking to grow that to 100, 200 people on the platform over the next 2 years. So, to land the plane, it was a challenge to build Rainmaker, but I'm glad I did it, and I think we've got exciting times ahead.
That's actually very interesting. I'm glad you kind of gave us the backstory there, where you said, yes, you were in the public markets over here when you were working with these larger companies, and then you came over here and you had to reestablish the Rolodex, the information, your own knowledge on these private markets, because it was a whole different ecosystem. So there was no overlap with the skills of working hard, going out there, making things hustle, kicking butt, doing what you got to do to, turn the dial. So that's impressive. Glen, and obviously billions of dollars, going, and during this whole transaction and at the macro level, that's incredible, incredible work you guys have done at Rainmaker Securities. Glen, for those that want to reach out to you that realize that they see these opportunities, they see the private markets, they see the secondaries, they want to get access to it, they want to have a conversation or a dialogue with you or your team, or have facilitate a relationship with you. For those that want to reach out to you, how do they reach out to you and connect up with you, Glen?
Well, I mean, come to our website. There is a way to contact through our website. I don't want to ruin the surprise, but Rainmaker Securities is actually over the next, we're going to launch it probably in the next 3 weeks. We're going to launch the first phase of our Rainmaker X platform, which is a trading platform we've developed that provides a little more of an automated, technology-oriented experience for investors in interacting with us. Through that, you'll be able to contact any of the people on our platform and obviously me as well. I would say come to our website, give us a few weeks to launch our Rainmaker X platform, and I guarantee it'll be worth the wait, because we've been working hard to have a cool new experience for our investor clients and our shareholder clients. And definitely reach out to me. I'm very responsive. If someone contacts me through the website, I usually respond within the same business day. And happy to help any investor or shareholder that is interested in trading. So.
That's very exciting, guys. And Glen, and for those that are listening, all those links are in the description below. Rainmaker Securities, there's a lot of content on there, so you can take a look at that. They'll put that your X platform, Rainmaker X platform, on there. So that's going to be really fantastic by the time this episode publishes. So we'll put that link down there as well. And I'll put his LinkedIn so you guys can reach out and connect with him. Glen, I really appreciate you being on here and just sharing
reach out to me. Do reach out to me on LinkedIn as well. I'm very, very responsive on LinkedIn. So I forgot to mention that, but yeah, definitely you can definitely reach me on LinkedIn as well.
Awesome. I'll put all those links down there. And Glen, again, I really appreciate you being on here and sharing your incredible wisdom, but also the tenacity you've been able to establish in the secondaries and the private markets, and just really sharing the incredible opportunities that still are available for the high net worth, ultra high net worth individuals that want to, collaborate and see where they want to deploy their capital with. And there's so much going on. Sadly, just the public markets just don't do justice, and a lot of the outreach, a lot of activity, and obviously you guys are on the forefront facilitating those relationships. So I really appreciate you being on here. Glen, I always love to ask my guests before I let you go fully, obviously you've done very well for yourself. You've transacted $1 billion plus in transactions with the secondaries. You've been able to scale Rainmaker at a very high level, securities. And I'm curious, if you think about that young Glen that just started it out, that was just coming on to Wall Street or consulting and working with these high caliber individuals, and then getting into becoming who you are now, the successful individual CEO that's running Rainmaker Securities. What insecurities did you have to overcome to become the Glen that you are now?
Repeat the last part of the question. What did I have to?
What insecurities did you have to overcome to become the Glen that you are now?
What insecurities? You mean in the finance business, basically?
Well, just in life, your own personal journey, insecurities.
In my own personal. Oh,
Yeah.
in securities. Oh,
In securities.
okay,
Yes,
sorry.
I'm sorry.
I
Yeah.
talk about this. I talk about the securities market all day. So, in
Yeah, no
securities
worries.
is. Well, look, I look at it as in. I mean, look, everyone has insecurities, and everyone stresses and worries about, aspects of their life. My philosophy always has been, like I said, to work hard, challenge myself, learn. And did I think when I was 22 that I had the ability to build a big successful business? I didn't think I didn't necessarily think I had the skills, but I felt like one day I could be an entrepreneur. And it was just believing in myself and doing the work to make it happen that led me to where I'm at, and not looking back. I mean, in business, you succeed and fail, and I probably failed far more than I succeeded in my career. It's just it's part of the human experience. But what I always do is I look forward. I never look back. Coach K, who was the men's basketball coach for Duke University and won like 15 national championships, calls it next play, which is you don't look back at the last play and commiserate about missing that shot. And equally, you don't look back at the last play and revel in your glory that you made the shot. You move your eyes forward, focus on the next play. And that's what I do in my career. If I fail, I get up, I brush myself off, and I move on to the next play, as he calls it. So if I were to give any advice for someone who's aspiring to be an entrepreneur and build something, I'd say that's the advice. Work hard, keep a positive attitude, and always focus on the next play.
Well said. Well said. That will be the topic of our next conversation, Glenn, when I come down and visit you in Miami. The next play, just going out there and just getting back up, brushing yourself off. Well said. Guys, that is the CEO and managing partner of Rainmaker Securities, the one and only Glen Anderson. Guys, that is Journey with Christian Evans podcast. Until next time, be uncommon if you can.